Hello everyone. Since President Trump announced reciprocal tariff on his Liberation Day, stock market has become very volatile. Global investors, they have become very nervous and started selling US assets, whether it's bonds, stocks or currencies. They have started selling off US assets. We'll discuss how you can navigate during this volatile period, how to manage your portfolio and make some better investment decisions. White House in one of those meetings on April 15 that it is going to impose maximum tariff of 245% against China, and China also retaliated by putting 125% tariff against United States. There is a lot of volatility. Nobody knows. Sometimes President mentioned that they're going to be increasing 10% tariff against China, 20%, 54%, 101%, or 145%, all the way up to 245%, and nobody knows what exactly is going to be actually the tariff numbers. And although they are saying that we're going to have a good deal against China, but nobody knows what's going on, what progress has been done. And this is basically creating a lot of volatility, especially all the company, the CEOs, they're not able to figure it out, how much money they should be investing in terms of their capex spending and other things. So as a result of which the market is selling off. Yesterday, also President mentioned that he's going to be actually he's asking the Federal Reserve Chairman Jerome Powell to cut interest rate immediately. And he's asking for a preemptive cut rates now. He called Jerome Powell Mr. Too Late, a major loser, and he asked them to raise interest rate immediately. And he also said that the Chairman Jerome Powell is playing politics. He said that he actually during the election period he lowered interest rate to keep Joe Biden and Kamala Harris, but at this time when the market is crashing, he's not cutting interest rates, short-term interest rates, when he feels like there is no inflation at this time. With all this volatility and negative news, people are actually losing their confidence, and they are not going to be they're going to be saving more money and not spend as much, as a result of which actually because US consumers actually drives the market, and then if they stop investing consuming, the market is going to slow down. So it's a very negative situation towards the market when the inflation picks up and the economy slows down in terms of profitability of the US company. It's called a stagflation situation, meaning slow growth and high inflation, and that is the worst situation for stock market to do well. So as a result of which the market has been relentlessly selling off last couple of weeks by huge amounts. Someday basically goes 3-4%. Maybe one day it recovers, but next day again it having an elevator fall, and people are really scared. And a lot of people people who have put their money in your retirement account or in 401k, they have been basically hit in a big amount. Say suddenly if you lose your investment amount by 20%, and people are very close to retirement or people who have retired, they are obviously not going to be very happy. Trade is crushing markets as Trump butts head with the Federal Reserve Jerome Powell, as if there is a boxing match that's going on right now. So I'm going to show you in this graph, I think that US Treasury is supposed to be a safe haven. So usually whenever the market sells off like this, people should buy bonds for security, but the reverse thing has happened, as a result of which I think on the April 8th the Treasury yield spiked. The relationship between the price and the yield, the inversely related. When the yield has gone, the 10-year Treasury yield that has gone, means the bond price has dropped. That means there is an indication that all these people who have invested in US treasuries, say for example Chinese government or Japanese government or European companies, European governments, they have started actually like selling US treasury bonds, which basically in effect is going to bring the prices down. Too many people are selling the bonds, and the yields are spiking, and the high yield basically has an impact to the consumers. So if the 10-year treasury, if it goes up, your housing like 30-year mortgage rates etc is going to be high, so it's going to have a very negative impact in the housing market. Similarly, us dollar is supposed to be very strong compared to other currencies, but US dollar index also has reached a 3 months low, meaning people are selling dollars, people are selling US treasuries, and people are selling bonds all at the same time. And this is a very scary time. And the on top of that, in a very volatile environment, when President Trump basically mentioned that he may be letting Federal Reserve Chairman Powell go, it is like putting fire in the gasoline. And basically the stock market sell-off accelerated even more yesterday. The 10-year treasury reached 4.41%, and then basically I'm showing these two graphs. That's basically around April 8, and towards the end yesterday this price basically spiked on 8. When the treasury yield spiked, President Trump mentioned that the market has been a little queasy when he asked, and he gave he extended a 3 months period to negotiate basically the different tariff deals with various countries. Actually saved the day.
You can't do that. Bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had. Well, the big move wasn't what I did today.
And market bounced big amount. I think the next day Dow Jones jumped 3,000 points. But again, after all this volatility, market sold off again last couple of days. Basically, it's at 98.37 yesterday, so it's gradually it's going downwards. It has been going up, and gold has reached a all-time high at $3,432 yesterday. The COMEX gold 1 ounce, and I also made a video actually regarding this the spike of gold price. So gold is basically people buys as a hedge for inflation, and in times of turmoil, uncertainty, say in case of war or market volatility or inflation, people buy gold, or even the central banks, they're buying a lot of gold, and the gold prices are spiking very high, reached the all-time high. Industrial average fell 971 points yesterday. Yesterday it was over 1,000 points yesterday. S&P 500 fell, and also basically you can see the direction. Basically S&P 500 also lost about 15% since all-time high earlier this year. And then Nasdaq basically fell another 400 points, 2.5% yesterday. And Nasdaq, technology-led Nasdaq, it's in bear market. Also looked into poly market to see what is the probability of a recession in 2025, and it says that towards the right side we are at about 56% of a chance of a recession at the end of 2025, which is kind of quite high. And if a recession happens, obviously the market sells off, and depending for how long this recession will last will depend if the market basically recover. If the recession is going to be a swallow recession that it just comes and then the market recovers, stock market should recover a couple of months before actually it recovers. But if it's a long staying a long period of a recession, bad economy, the market will continue to be down. 1990 you could see that those the red marks below shows this occurrence of bear markets. There are about 6 or 7 bear markets that has happened. Say for example, COVID, or the housing crisis, or dot-com burst, or 1987 crash. Market sells off very rapidly, but over a period of time, they see this is S&P 500. The graph is basically always over a period of time. Market is upward sloping. The market always does well. So after the bear markets, every bear market, it reaches another high. Although sometimes it recovers pretty quickly, but sometimes it takes longer. Could be so, but it does recover. And so if you invest in this kind of environment, and if you have basically do not have any urgent money that you could hold, this may be like a good time to actually invest. Um, and I can also see another graph, how basically market recovers after each and every bear market. In these things that you see this blue line above this, middle of the line, and below the all the orange colors are recession. And sometimes there has been a pretty severe bear market, in a market, but seems like this bear market has been longer duration, shorter duration compared to this the bull market expansion. And during each of this bull market, that's followed by the bear market, the market reaches the higher and higher, and it basically it also it will tell you how many percentage basically it has recovered for and how long it has taken. So it seems like this the bear market basically spikes has been shorter, but the gain during each of these bull market phase has been dominates the loss during the bear market. That's kind of like at a high level. Long story short, that if you're a disciplined investors, and you could basically have some a strategy to do dollar cost averaging and then invest in the market, because over a period of time a lot of people makes a lot of money during the by investing in the bear market, because you could get the prices of equities at a low price, and then when it goes up, you do pretty good. But at the same time, please consult your financial consultant. Please consult them before you invest. I am not a financial advisor. I'm just like a YouTuber. Make sure your money is safe and then properly invested. And also another thing is that you should also diversify, because what diversification does is that it basically distributes the assets. They will have different correlation when the market goes up or market goes down. So if all of them goes up or goes down, you might end up losing a lot of money. So when you diversify in different asset classes, say for example gold or crypto or bond or stocks or oil or ETFs, and then do not bail out during this basically in a like a bear market period when the market stocks are very low, and if you sell off you will have real loss. But currently what you might have is like a paper loss, and as long as you can sustain this period, so have some savings for so that during this bad time, if you do not have a job or something, so that you can comfortably pass and get a job, and then continue investing. So those are basically, I think is a good time basically at this the economic turmoil bear market period, basically that have a strategy and then continue investing. That's all I have to say at this time. Hope you like this video. If you did, please click this like button, and I'd really appreciate if you subscribe this channel so that I can make some more videos like this. Thank you and happy investing. Have a nice day.